So guys, have you ever take a very perfect setup and still price to hit your stop loss? One of the reasons might be because you are not taking the DXY or the yen basket. In this video, I'm going to tell you what the DXY stands for and what the yen basket stands for. So now, first of all, DXY is the US dollar index, which means DXY is the Oga Pata Pata. Let's try something. Which means DXY is the Oga Pata Pata for any pair. Example, GBPUSD. DXY is the Oga Pata Pata for GBPUSD, EURUSD, NZD-USD, what again? AUD-USD. DXY is the Oga Pata Pata for them, which means if DXY is bearish, GBPUSD, EURUSD, NZD will be bullish, and if DXY is bullish, all these other cross pair will be what? Bearish, which means DXY is the direction, because all this dollar index, all this dollar sign, this is the Oga here. So therefore, DXY is the directional person of the market. Now for the yen basket is the Oga of all the yen pairs, something like JPY's pair. Now for the yen basket, we have something like GBP-JPY, we have USD JPY, we have EURUSD JPY, USD JPY, EURO JPY, and so forth and so on. So now I'm going to tell you how I use these two particular pair to decide whether I'm going long or whether I'm going short in any of these particular pairs. You understand? So if I should be trading the GBPUSD or the EURUSD, I will first of all analyze the DXY market. Anything the DXY market is telling me, I will do the opposite of that in the GBPUSD or EURUSD pair. The same thing goes to yen basket. Anything yen basket is telling me, I will do the opposite of that in all the JPY pairs. So first of all, we're going straight to our DXY, and we'll see what our DXY looks like. Now this is the DXY index, and we're going with this capital.com. Now this is what we have over here in our DXY. Now let's check something. For example, now this is the 15-minute time frame of our EURUSD. Wow, you can see this heavy spike down on the 15-minute time frame on our DXY. Let's check it on our EURUSD. Let's check the same. Now looking at the EURUSD, you can see the same spike to the upside. The same thing goes to GBPUSD. You can see it. The same thing over here. As simple as that. You understand, guys? So this is to tell you that DXY is the Oga Pata Pata. Anything happening in DXY, we are doing the opposite of that. So now, first of all, let's analyze our DXY. Now let's do a top-down analysis on the DXY before implementing that same particular analysis on the EURUSD, and we'll also do the same for the JPY pair. Now, you don't have to do a top-down analysis. First of all, you go straight to your 1 minute, your daily time frame to know the directional bias of the market. You guys already know how we trade over here. You know our strategy. Let me straight down our strategy for you. If you don't know our strategy, let me teach you my strategy. First of all, we're looking out for the directional way movement of the market. So you can say it. We're looking out for our BOS, our break of structures. If price is breaking structure to the upside, or if price is breaking structure to the downside, that is where we will be facing. You understand, guys? And after that, we'll be looking at the origin across the break of structure, also known, the origin should be a fair value, other block, not fair value gap. Should be other blocks. So therefore, we need our other block to confirm that an origin is very strong. After that order block, we have something again, our fair value gap. Our fair value gap, guys. So now, after getting our fair value gap, we need something, we will need our imbalance or liquidity. And after that, we need our entry model. So these are the 5 things that we will be looking at from our DXY before we can be able to implement that on our GBPUSD. As I said earlier, this is my strategy. These are the 5 things that I look at from the market. So first of all, what is price saying? Now, judging from the current movement of the market, we have our break of structure over here. This is our break of structure. We have another break of structure. So therefore, we are bullish. We are bearish. Sorry, we are bearish in the DXY. We are bearish in the DXY. You understand that? We are bearish in the DXY because this is our break of structure here to the downside. Then after seeing that, we go straight to our 4-hour time frame to modify this particular setup. Let's modify it first. Now, modifying this particular setup, you can see something like this over here. This is our break of structure. This is our origin that caused the break of structure over here. All these are okay. This is our origin there, and this is also our fair value gap. Remember the rules, guys. Fair value gap. This is our fair value gap over here. Price is getting off this fair value gap over there. You understand, guys? And what else you need is you go down to our 15-minute time frame and look for our liquidity. Now, I'm looking at the market, guys. Let's judge from the market. Let's analyze what the market has been doing from here up to this particular place. Let's see what the market has been doing. Now, we're looking at this analysis. In our daily time frame, we are bearish. In our 4-hour time frame, we are bearish. But in our 15-minute time frame, we are bullish because price has been breaking structure to the upside. Our break of structure. Our break of structure. This is our change of character. And so on and so forth. Now, when coming to this particular place, you can see this is our break of structure. This was the last break of structure that occurred. Break of structure. So now, this is our 4-hour order block. So what you expect price to do? Price has already mitigated this fair value gap over here. So let's take it out. While mitigating the fair value gap, price created our liquidity. This is our liquidity over here. So therefore, for those early traders, price is only sweep them out and take us in. So what are we expecting from the DXY? Now this is what we are expecting. We are expecting price to do something like this. Go down a little bit, go up. Something like this. Go down, go up, tap us in, form or create what we call mitigation block or a MSS, market structure shift, and giving us our order block here or our fair value gap here as our entry model. Then we enter from there and we're going to the downside. As easy as that. This is what we expect the market to do in our DXY. Then the same thing goes to our GBP USD. Anything we are saying here will also happen in our GBP USD and also in our Euro USD. Now, going to our yen basket, let's analyze the yen basket to consider. Now, let me say something out. We are expecting price to push to this particular place before going down from our DXY. You don't need to analyze too much in our Euro USD. No need to analyze too much, understand? So what we're expecting from price is to push down here before going up. That's what we need, to push down here, then our entry, and then we're up before going up. That's what we need from the market, from our Euro USD. Or the same thing goes to GBP USD or NZD USD. So now let's check our yen basket. Checking our yen basket, let's see what I have there. Remember, yen basket predicts what happened on GBPJPY, USDJPY, CADJPY, EURUSD and so on. Any pair carrying the JPY pair at the end is being controlled by the yen basket. You understand me, guys? There's our third analysis also here to predict where we will be going. Now, I'm looking at this. I think we are bullish. That is what I think. I think we are bullish. But right now in this particular video, you will be seeing how I'm going to analyze it and consider or figure out if we are bullish or not. First of all, let's read the market structure as per our strategy. Wow. This is our week of structure, guys. To the upside. This is the origin. Price is just reacting off an origin. Price is just reacting off an origin of a daily time frame. To show that this origin is very strong, guys. This is a very strong origin and a very strong order block. Let's find out. As for our daily time frame, we are bullish. In our 4-hour time frame, we are bearish. And for you to have a very perfect entry, your 4-hour time frame, your daily time frame, and 15-minute time frame must be moving in the same direction for you to be able to consider if you are bullish or bearish. So as for now, we are not yet ready till the 4-hour time frame align with the daily time frame by pushing to the upside. Our week of structure, and this is our recent week of structure here. So as for now, we are not doing anything now because price haven't reacted off this. We are still at our origin, and this origin is being drafted out from our daily time frame. So we need our 4-hour market structure shift. So price need to shift from this particular place, something like this. We need something like this for price to break out this particular area and give us a break of structure to the upside before we consider our 4-hour time frame bullish. But for now, our 4-hour time frame is bearish and our daily time frame is also bullish. We're not doing anything here. There is no market. We're not doing anything here, guys. Leave any JPY pair. You can trade AUD card, you can trade USD scarf, you can trade other pairs. But for JPY, yen basket or JPY spare, leave them for now because we're not yet ready. We are still cooking. We are still cooking, guys. We are still cooking.